Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Monday, June 22nd. We are kicking things off today with a conversation with Ryan Spoon, president of Yahoo Media Group. We'll cover what he's expecting from Cannes Lions this year. We'll talk about the World Cup. We'll talk about prediction markets. Next up, SpaceX had a strong debut, but what does its IPO tell us about OpenAI and Anthropic? We will unpack a collection of stories we published around that topic shortly. And speaking of IPOs, the Information published exclusive reporting that Kalshi has held informal conversations with banks about its potential IPO. We'll have more details for you on timing and also Kalshi's financials. We're going to wrap the show with a look at a new proposal from Bernie Sanders that would give everyday Americans a stake in the AI boom. It's going to be a fun show, so let's get right on into it. Cannes Lions Ad Festival is kicking off today. There are a lot of changing tides in advertising right now. Meanwhile, the World Cup is still in full swing. To break down all of this, I want to bring on Ryan Spoon, president of Yahoo Media Group. Ryan, welcome to the show. It's great to have you here.
Thank you for hosting. Yes, it's an exciting time as always.
So you've got a bunch of your team members in France right now for the Cannes Lions Ad Festival. I wonder what you think the big themes are that you're expecting to come out of that event this week.
So I'm back in the States as we have. It's a very busy time on the sports front. Obviously, we'll talk World Cup. You have the NBA draft 24 hours away. On the advertising side, that is the core of our business as Yahoo, and certainly as Yahoo Sports and Yahoo Finance. And for us, it's the mixture of really premium experiences, bringing our partners and advertisers front and center to those experiences, whether it be the product, the content, the video, and then mixing that with data and what we know about our logged in, really highly engaged audience. And so this is the best time of year to be with that audience. And on our side, on the Brian Sazi will be there for the finance side, doing interviews and so forth. Obviously, our head of sales and events team and so forth. And then on the sports side, we're covering World Cup, and we are at Barclays tomorrow for the NBA draft and so forth.
Right.
So doing it everywhere.
I want to get to the World Cup in a second here, but I mean, just if we think about advertising right now and what you're seeing, I wonder to what extent AI is changing the advertising game as you see it from your perspective.
So from my perspective, my time with the AI front is really around speed to delivery, better creation of experiences and products. You talked to Jim, our CEO, just a few weeks ago, and products are the core of what we do. And the more we can push and build and deliver, that creates better experiences for the advertisers. And so for us, it's delivering more, delivering faster, and allowing us to create more environments for the premium ads to live.
Let's talk World Cup. So we are in the thick of it. I was just in BC over the weekend. They had games happening in Vancouver.
Amazing.
Just south of us, there was Seattle. We're in New York right now. You've got New York, New Jersey. How do you think that this year's World Cup or this World Cup differs from, let's just say, the last World Cup in terms of the media and how the media ecosystem is trying to take advantage of this sporting opportunity?
So you had, from a very U.S. perspective, because that's where we're sitting, that's where it's hosted. It's really pretty remarkable in that, first of all, the U.S. is highly relevant as a team, and has had two fantastic matches to start and will advance. You also have four names, three of which play today. You have Mbappe, you have Messi, and you have Haaland, all play today. All were phenomenal. I think they scored 7 goals between the three in the opening game. And those names are way more relevant today, in part because of MLS and Apple, and obviously what Messi's done. But that the sport has grown so much, the fandom has grown so much, and now to do it in the States while the U.S. men's team is so competitive, is really remarkable. And our approach to this has been very consistent with the way that we cover all sports, to do that with partners, to build games around it, to drive that fandom, and to do it with coverage.
So
So
what have you done differently for this World Cup at Yahoo compared to last one, given the way the media landscape has changed?
So we very fortunate to have a great relationship with Fox, and we built a fantasy is core to what we do across the sports side. That is a real leadership and historical part of Yahoo Sports. And so we launched fantasy games with Fox in conjunction to obviously support their broadcasting and bring our fans to that. And then, very different to where we've been in prior years, video's really core to what we do. We have over 60 hours of live video a week in sports alone. And you see that with Taylor Twellman, the Cooligans, the two Robbies. We have really fantastic live shows and then surround shows to do the coverage.
Are you
That's
doing
in it.
anything with prediction markets at all?
We Not specific to soccer, but we obviously have had relationships and have a relationship with Polymarket across sports and finance. Kalshi is now part of our Uncrowned experience and coverage. So Uncrowned is our MMA and combat destination led by Ariel Helwani. So if you would have watched the UFC 250 coverage, pre, post, and so forth, Kalshi would be part of that.
Got it. And for people who aren't familiar with that, but basically, people can see some of the Polymarket and Kalshi prediction markets on the Yahoo platform. What does that look like tactically?
So I am a big believer that whether you choose to bet in sports or predict in sports, it is important to the narrative of outcomes. Understanding favorites, movement, projections, and so forth is a very important part of the sports fan experience. We've historically had a very long-standing relationship with BetMGM. Um, and as we've now opened up beyond that, that expired this year, a couple months ago. We're now working with different providers and partners, vertical by vertical. So yes, you will see for instance, in the UFC side with Ariel Helwani and the Uncrowned side, they will talk about outcomes and projections based on those numbers provided in that case by Kalshi in the prediction markets. But you will also see, for instance, providers for the France matchup today to show just how dramatically they are a favorite. For instance, they're favored by 2.5 goals, just for context.
Right. I mean, speaking of predictions, I wonder what predictions you might have about how sports media might change in the next year or two. Do you see prediction markets getting into sports media a little bit more seriously? We saw, I mean, I'm thinking about Robinhood. Robinhood, they launched their own media arm. Now there's reports that they're gonna wind it down. But I mean, do you see prediction markets being a central home for sports media or any other predictions going forward?
Look, if you and I had this same conversation 5 years ago, this exact same discussion could have existed around. And I took a prior life. I worked at BetMGM. This same conversation could have existed within the sports betting space, right? These same discussions were there. Um, I don't know ultimately, and by the way, that started to course correct in different places. I don't necessarily know what their um, role on the media side becomes. I know what our role is, and I think it includes working with them all as partners. But I think very, very core to reporting and media is accuracy, trust, the need to have robust news desks and partnerships and verification and so forth. And that's something we take very seriously. And I think that's hard to do if you just dabble in it um, someone who's been around. You would test, you'd be able to verify that as well.
Right. Well, great. Ryan, I want to thank you for coming on. That is Ryan Spoon, president of Yahoo Media Group, here on TITV.
Thank you very
SpaceX had a strong run in its first week as a public company, but now we are focused on what its IPO process tells us about when and how OpenAI and Anthropic will go public. My colleague Cory Weinberg went out to his sources to find answers to that question. I want to bring him on to break it all down. Cory, welcome back to the show. It's great to have you here.
Good morning, Akash.
So, Cory, you put out a couple stories over the weekend and today. The first of which highlighted the fact that SpaceX took 74 days to go public from the time that it filed its confidential prospectus to when it actually listed. 74 days. Put that into context for us. Is that fast?
That was the fastest that I could find among a large tech IPO, which is notable just given how large and complicated this deal was. So a typical IPO takes anywhere from 3 to 4 months from confidential filing to actual listing date. SpaceX took about 2.5, 74 days in total from actually going from confidential filing to the IPO date, and so this was rapid fire.
And why was it so fast?
There's two legs of the journey for an IPO, essentially, two primary legs. One is the period where the company is getting comments back from regulators after they submit their filing. That's usually weeks, potentially even months. That was very fast for SpaceX. And then there's the period where the company is meeting with investors, explaining the deal, explaining the company on the roadshow. That usually takes at least a couple weeks. SpaceX shaves some time off of that. So you have this combination of sort of these two legs of the journey, them shaving off a good chunk of it from each.
Okay. I wonder, as you think about the speed at all. I mean, how much of this is the current administration that we're in? You talked a little bit about it in the story. I mean, they seem to want to expedite things, want to get these companies out to market. What do you make of that?
Yeah, this administration is definitely trying to essentially focus on capital formation for the equity capital markets, and these IPOs are a big part of that. So that first leg of the IPO journey that I talked about, that kind of regulatory piece of it. I think there's essentially a mandate within the SEC to, sort of not hammer companies over the head with comments about, what did you mean, when you disclose this deal, or what did you mean by this term or whatever. That is definitely a piece of it. And I think that's going to be an important cue for other companies coming down the pike that are considering IPOs, that like, hey, we might have a kind of easier time with the SEC than we otherwise would.
And we don't know right now what comments the SEC gave to SpaceX. That'll all come out in the next couple weeks, right?
Yeah, most likely the next couple of weeks. There's a process where all the comment letters are kind of go back and forth between the companies and the SEC. That is unveiled usually a few weeks after a company's IPO.
Okay. So you talked about now the what this queues up for other companies looking to go public, like OpenAI and Anthropic. And you talked about how short a time span this was. So what's your read on things here? Are OpenAI and Anthropic, are they looking to be, later this summer IPOs? Are they rushing for the gates? Do they want to take advantage of this window? What do you think?
Uh, Both companies confidentially filed earlier this month, and if they essentially are able to match SpaceX's timeline, that would put them each sort of on target to go public as soon as mid to late August, which so just cancel your summer plans, all you IPO watchers. It could be really fat. Like I'm scrambling. Like what am I gonna do?
Canceled all your vacation because the time
Yeah,
74
exactly.
days takes you to August.
No, it's scary. That was part of this exercise was, selfishly wanting to plan my year. No, I mean, so August, IPOs like never happen in August, just as a caveat. I mean, who knows? Maybe these companies will be different because, they can do whatever they want. They can raise more money than God. But essentially does set the SpaceX deal does set the pace, and I think OpenAI specifically has said, look, we might not go public immediately. So obviously the companies give themselves some wiggle room. You don't have to go public. You don't have to, you can start the process with the SEC and then wait a little bit. So with that caveat aside, still these companies might want to take advantage of a very sort of clear market window where public investors are very much willing to fund top AI companies.
Okay, so whenever it does happen, the other story that you published this week looked at when OpenAI and Anthropic, but when OpenAI goes public, what are the nuances that the SEC could have to grapple with and pay attention to? Walk us through some of the complexities here with OpenAI and what we could and shouldn't expect to see in the filings whenever they become public.
Yeah, so if you recall, we published a story last week, sort of unveiling some of OpenAI's financials from the first quarter, and we've reviewed some of those statements and sort of want to anticipate what the public is going to see when this confidential IPO filing drops, in a matter of months or weeks. And I think, we've had this kind of at least 2-year-long conversation about these sort of web of deals that OpenAI has done with their own investors, as they've sort of really raced to amass as much compute and data center capacity as possible. They've done all these deals with Microsoft, with NVIDIA, with they've done leases with CoreWeave and Oracle, and so they have these hundreds of billions of dollars worth of compute commitments that has been talked about ad nauseum. What was striking to me looking at these financial statements is just how light OpenAI's balance sheet is, which is usually the place where you would expect to see, sort of debt, capital expenditures, anything related to commitments or hardware or anything they're on the hook for. The reality is when people look at OpenAI's balance sheet, they're going to see very little debt, they're going to see very little lease liability, and essentially what that means for the IPO process is OpenAI is going to have to explain what these purchase commitments look like elsewhere in the filing. This all follows accounting rules, but I think investors are going to have to be a little bit more sophisticated in OpenAI's case to kind of understand, okay, what are they actually on the hook for? Because it's not going to be on the balance sheet.
So, for people who haven't spent as much time reading the disclosures that are associated with balance sheets, why is it that all of these multi-billion-dollar purchasing commitments don't show up in the balance sheet at all? I mean, what's the rationale here?
I mean, it is I should definitely say it's standard accounting. They're following accounting rules from what I could tell. And but it ties back to, is this actually a deal where you own and operate or control or have taken actual operation of the data center? Then it will hit the balance sheet. But these kind of future commitments are all going to be piled into other parts of the S1 filing. There's a section called commitments and contingencies where a lot of off-balance sheet leases sit. There's other sections where it could fit. So basically, we haven't seen the S1 yet, but what I'm trying to just sort of lay out for people is, sort of these commitments, which are, as of the end of last year, stood at over $650 billion worth in the coming years. You're going to have to look a little bit more to kind of see where those might be and where those are spelled out.
Right. Now, the other thing that you laid out here is you laid out there would be a lot of considerations around the warrants because of the valuation size. Can you talk about that a bit?
Yeah, the other kind of quirk of OpenAI's financials are in its income statement, where one of the largest sort of line items that hit its bottom line is this huge expense related to warrant charges, going back to, obviously this restructuring deal OpenAI did to ensure that it would, sort of get out from the original nonprofit structure that guided it in its early days. It created this separate nonprofit that has a stake in OpenAI. And so that's essentially a related party deal where there's going to be this expense charge that you're going to see that's very large related to OpenAI's rising valuation. Those warrants can be difficult to value. Oftentimes, that's just like, sometimes investors just ignore it. It's a non-cash charge. Who cares about it? But otherwise, people might want to understand it.
So, I mean, taking all this together, Cory, you've got this company that will go public. Their financial statements, they're not hiding anything. It's just you have to look a little deeper to get the full picture. I mean, as you think about this from an investor perspective, does it make it a riskier invest? I'm also thinking about the tentative nature of these deals. If they're not on the balance sheet, then are they more likely to change, therefore adding to the unpredictability of the nature of the business? Like, what does all this tell you about the state of the company?
I think, I'm hoping that there will be a lot of disclosure around different contracts that OpenAI has signed, so that if this is one of the most important IPOs ever. I think investors will want to get a handle on where the risk actually lies and where OpenAI is on the hook to pay, even if demand sort of shrivels up. I think that's going to be an ongoing storyline. At the same time, as we saw with this SpaceX IPO and sort of how fast they got through the ringer with both the SEC and with investors, let's be real, this is at least a market period right now where people aren't necessarily asking all the tough questions that they should be. And so, will the fundamental investor who's really digging through all these filings, be the one who, looks smartest in the end? I don't know, but I do think what I generally believe is that we all benefit from more disclosure from companies, and that's why we do what we do as journalists, and so I would think investors would want the same thing.
And I should say, I mean, we're talking a lot about OpenAI here, but you do point out in the story that Anthropic is in very much a similar situation. Although I don't know, it feels like my read on it is They've they haven't it's no smaller a company, but it seems like they've done less or proportionally less of these confusing deals.
Well, I think I think the shorthand, for these companies is OpenAI has been much more aggressive in amassing sort of future data center capacity than Anthropic has. And that's why you saw them sort of sort of struggling with keeping up with demand as their demand spiked this year. But yeah, they've started doing kind of SPV deals, lease deals, and their deals are getting more complicated as well, just because they need to amass more compute.
Right. Great. Well, Cory, I want to thank you for coming on. That is Cory Weinberg, our senior reporter here at The Information. Speaking of IPOs, Kalshi is another name that people expect one day will go public. It is still a ways out, but my colleague Yueqi Yang caught wind of some of the ways in which Wall Street is preparing for it already. I want to bring on Yueqi to share with us what she found. Yueqi, welcome back to the show. It's great to have you here.
Hey, Akash.
So let's talk about the scoop that you started off the story with. You found out Kalshi's latest revenue. What did you find?
So, according to sources that I've talked to, Kalshi has surpassed $2 billion of revenue, of annualized revenue. And the fast growth of the business has led to informal early talks between Kalshi and investment banks about a potential IPO.
$2 billion. How fast is that growing? Do we know?
It is fast. Some of the Kalshi's VC investors like to say that Kalshi is the fastest growing startup outside of AI. And if you look at the volume number, it shows that Kalshi is growing very quickly. The annualized revenue now has passed $2 billion, which is 3 times more than what Kalshi shared with investors just in the fall last year. And in the first 2 weeks of June last month, Kalshi saw more than $10 billion of trading volume, comparing to just less than 500 million trading volume in the same period last year.
Wow. Now, all of this traction, is it just people betting on the World Cup? Like, what's driving it?
Look, it's the summer of sports.
I
And
know. I mean, God,
right?
we just had, Ryan Spoon on. You've got so many predictions to make.
Yes. So sports drives about 70% of volume on Kalshi. So the NBA has been great. World Cup is also a hot betting events for Kalshi. And then in the fall, you will have NFL coming up. You have midterm elections coming up. So the games never end.
That could be the slogan for one of these the games never end. That's quite fitting. Um, okay, let's go to the IPO timeline for this company. So you reported that Wall Street has started to approach Kalshi, which I think, as you point out in the story, I mean, it's not uncommon for any Wall Street bank to approach a fast-growing startup or late-stage company so that they can get on their good side for an IPO. Do we know anything about Kalshi's plans or even Polymarket's plans for an IPO timeline-wise? Is this something we should be expecting even next year?
So the talks between Kalshi and investment banks are early and informal. So the IPO will unlikely to happen until later next year or even 2028. We also know from sources that as part of the conversations, Kalshi is trying to get banks to integrate with Kalshi exchange, which means that the institutional clients of banks will be able to trade on Kalshi's prediction markets or even its new perpetual futures product. And this is part of Kalshi's push to attract more institutional investors because for the most part of the company's history is really propelled by retail investors.
Now, you cover crypto and you covered all of the crypto companies that have sought to go public and under the previous administration ran into some complexities with the SEC. We just had our colleague Cory Weinberg on talking about what the SEC will have to consider with respect to OpenAI and Anthropic's IPOs. Do you think that there are some roadblocks here for Kalshi in going public with the SEC? Or do you think that under this administration, they kind of have a clear path and they might try to get out sooner rather than later?
That's a great question. I think the SEC under this administration has been pretty friendly with companies working on pushing financial innovations and pushing the boundary of financial regulations. And Kalshi is one of those. Kalshi does face huge legal uncertainty over the sports contracts that it provides. There are several states that have already sued Kalshi, asking it to stop offering these contracts because they allege that Kalshi is effectively providing illegal, unregistered sports gambling. Now, Kalshi has said that it is regulated by the federal regulator, the CFTC, and if it follows federal regulation, and so it's seeking to dismiss these lawsuits. For a company that faces these legal uncertainty, usually when they go public, they will disclose in details all the risk to investors. So I'm not sure it will entirely prevent a company from going public, but this is something that they will have to make clear of during their risk disclosure.
Right, and I mean, it might not be existential in terms of whether or not it can be a public company, but it could be existential in terms of how much revenue the company generate or what the business model could be going forward. The last thing, Yueqi, that you point out in the story is that Kalshi is still looking for a new CFO. Do we have any updates on who is the CFO right now even?
So far, they have an acting CFO who's their chief of staff, Alex Cory. Their prior CFO, which they only hired late last year, has already left the company. So they are looking for a new CFO, and getting the finance team ready and getting the audited financials will be a big part of any IPO preparation work.
And I mean, look, here's a prediction. I mean, I think the crypto companies need their CFOs right now more than anyone else, but I think you could see some of those more veteran CFOs from crypto land joining Kalshi because they have so much experience taking companies public with so much legal uncertainty. Maybe that's something to watch for. Yueqi, I want to thank you for coming on. That is Yueqi Yang, our crypto reporter here at The Information. A new plan in Congress would let everyday Americans reap the economic rewards of the AI boom. For this week's Big Read, our tech culture and wealth reporter Eli Rosenberg wrote about that plan and one of the big names who is backing it. Eli joins me now to share with us what he learned. Eli, welcome to the show. It's great to have you here.
Good to be here, Akash.
So tell me about Bernie Sanders' plan here around a possible sovereign wealth fund.
Yeah, so last week, the senator introduced a pretty bold piece of legislation. It would levy a 50% equity tax on major AI companies like OpenAI, Anthropic, Google, once they hit the 200 million threshold in sales. That equity, again, transferred via a tax, would then be placed in a sovereign wealth fund for the public to be managed by a bipartisan commission. Currently, based on the company's current valuations, that fund would be worth around $7 trillion. And then the plan would be for it to pay out a sort of 5% annual dividend to the public. And again, at that $7 trillion valuation, that would be about $1,000 a person here in the United States.
Okay. How close are we to that becoming a reality?
Well, I think we're still in the early innings here. There's a lot of ideas about what to do about the changes that AI is going to bring to our economy, what to do about the incredible wealth it may generate. And this is just one idea. Obviously, Senator Sanders is sort of a leading voice on the left, but as we all know, Congress currently controlled by Republicans hasn't shown much of an appetite, if any, to legislate or regulate AI. So its prospects for passage in Congress right now would seem unlikely. That being said, it feels like a significant step forward in having the conversation about what to do and why we need to be having that now as opposed to later.
What do the AI companies think of this?
So the AI companies have not weighed in, to my knowledge, on this specifically yet. But they're obviously talking about this. The idea itself, you can find some of its roots in a blog post that Sam Altman wrote in 2021, actually, before the kind of current AI craze kicked off. But talking similarly about the issues we're still talking about now, that there's going to be all this wealth created. There may be high levels of joblessness. What, as a society, should we do to respond? And Sam Altman himself, again, now 5 years ago, talked about doing a tax that would then transfer some equity in these wealth-generating companies to share that wealth with the public.
So seemingly he's not averse to the idea, at least as of 5 years ago. Then.
Yeah, that's correct. And there's some reporting now that he's been in talks with President Trump to talk about other ways to grant the government a stake in OpenAI. That's a little bit of a different mechanism potentially, but I think all the companies in various ways are out there studying the economic impacts of their technology, starting to dip their feet in politically, and it's just not clear exactly which way everyone's going to go. But I think everyone can sort of get on the same page and agree that we at least need to have the conversation.
Now, you talked about, reasons why this is not likely to be a reality in the short term, at least, given the way Congress is set up. But what is the everyday public's reaction to this? $1,000 that sounds pretty good to me. But are there more obstacles here that they would have to overcome to make this popular with people?
Yeah, I think an important backdrop is there's rising skepticism about AI. We saw this wave of commencement speakers at colleges booing folks when they would mention AI. Certainly, it seems like younger folks who are graduating into a tight job market have some concerns about it. So I think, and the political system is reacting to that. When you start getting into the kind of pundit level, there's, this can split across somewhat predictable lines. You kind of have skeptics and the free market absolutists who, look at it as classic government overreach that's going to kind of choke off innovation in the tech sector, just as it's kind of taking lift. And then, you find some folks on the left, obviously. Bernie Sanders carries a lot of credibility with those folks who support something like this. So, it's falling into the kind of predictable political lines here in the US. But again, as sort of like this technology advances, as we see where it goes, I think it's still clear that this is a discussion that people want to have.
Right. So this kind of sets us up nicely to get into some of the more nitty-gritty details here. There is a law professor who you profiled for this weekend big read who is one of the leading minds and voices, I guess, behind this initiative. Who is this law professor? Tell me about her.
Yeah, so Sarah Poles, she's a UC Davis law professor. She specializes in intellectual property law, but she's also sort of at the center of the storm in Silicon Valley. She's been here in the Bay Area tech scene for more than 15 years. And her husband is very high up on one of Google's AI teams. He leads the Blue Shift team at Google. So through their years here in Silicon Valley, through their work, they know just sort of a who's who of folks who work in AI and who are very, at this point, powerful in AI and just other, other areas of tech, robotics, and others. So she kind of has a foot in two worlds, one being sort of the wonky world of academia and the other being sort of the centers of power in Silicon Valley. And she, along with another law professor, is actually the originator of this idea that Sanders picked up and ran with.
Why does Bernie Sanders trust her so much? What is it about her?
Well, I think she has a lot of academic credibility. She's been studying intellectual property for a long time now, publishing on it in somewhat relative obscurity. The angle she's brought to it is that AI is a tool that is built off of the data and work that humans have put out for centuries, and therefore it raises a lot of interesting issues around copyright and intellectual property. And this is an area that she has a lot of expertise in, that she's been working on for many years. The other law professor she teamed up with, Jeremy Bear-Friend, is a tax expert. So the two of them kind of put their specialties together. And again, sort of having that sort of legal expertise, I think, clearly spoke to something in the senator in his office.
Did you have a chance to speak with her at all?
Yeah, I spent a lot of time talking to her the last couple weeks. I was
What
particularly
were the big questions that you went into that interview with, and then we'll talk about the answers.
Yeah, I was particularly interested in this kind of dual role she has, where she's living in the world of ideas and helping draft this thing that she's clearly passionate about and believes in, and at the same time, socially and in the real world, very much it's ensconced in this community of folks who could be affected by this legislation. To me, that seemed a bit transgressive, especially in a moment where we've just seen a sort of free market ethos take hold. We've seen a lot of folks kind of articulating more right-wing views, at least sort of more prominent than they used to be in tech. And I was just sort of curious what it would be like to sort of be in this world, to kind of have that community and at the same time be proposing this thing that she doesn't think is antagonistic, but could certainly be seen as that from folks sort of working at the top of the AI field.
And how did she respond to that? What was her answer?
Yeah, I mean, I think she described hosting a party a couple weekends ago with a lot of top, just their social circle, a lot of top AI researchers, investors, and other people, where she, Sanders had just released an op-ed where he said he wanted to write a bill based off of her idea, but it was still kind of not widely known that she was one of the main people behind it. And she would describe to me feeling quite nervous kind of going into it. What would her friends think of
Going
her
into the party.
into the party? Yeah.
Right.
Would she be disinvited from, whatever summer vacation she's been on, invited on from some of these folks? And it looks like that some of those fears have come to bear. I think that this proposal is a bit of a lightning rod. The response isn't uniformly warm from people in that field. But at the same time, I think she's very much believed in it. And that was the sort of space that I thought was really interesting, again, for a sort of human-driven look about, of course, the idea, the mechanics and all of that, but just who are the people behind these ideas?
Right. So Yeah, I mean, Eli, you started a couple months ago here at the Information covering tech, wealth, and culture, and I mean, this is such a fascinating um, story because it's emblematic of some of the broader stories that we're seeing on your beat. I mean, where do you expect this story to go? What are you watching for on your beat broadly? Talk a little bit about that.
Yeah, I mean, one thing I've thought has been interesting is that we have this very public rightward turn within some of the most prominent folks in tech, sort of corresponding with the change in administration in Washington, the beginning of President Trump's second term. That's obviously been a huge and important storyline to cover. But one thing that was sort of clear to me is that, the sort of previous paradigm in tech where you had a lot of sort of lefty progressive folks here in Silicon Valley and all the kind of interesting issues that raised within companies, when employees and others felt like their companies weren't living up to their ideas or were contributing to things like climate change or work with repressive regimes that sort of went against those values. We saw a lot of conflict, many years back. Things have changed since then. We've had years of layoffs in Silicon Valley. We've had obviously a changing guard in Washington. We've had growth and wealth and inequality since then. There's been a lot of new dynamics added. But that being said, I sort of have always felt like, those folks who were such a big part of the tech scene and also the way we covered the tech scene didn't just disappear overnight. They didn't just vanish. They might have gone underground in some ways, but they're still out there. And those kind of conflicts, again, between the kind of those ideals and the industry's imperatives, we're going to sort of come back to the fore. And I think this story was very much, an indication again that these folks, I don't exactly know Sarah's politics, but she is working with Senator Sanders' office on this. So that some of those folks are still out there and they're still influential, and that sort of clash of ideas is still very much a potential here in Silicon Valley.
And it kind of goes to maybe this is what you're getting at, but these companies will continue to get bigger. They will raise more money. They will go public. You've got people who are very much split on a number of issues, and so I mean, to your point, it sort of sets the stage for a really interesting battleground here in terms of what ideals end up surfacing. Because, like you said, the people with money. I mean, it's a heterogeneous bunch. It's not so simple in many cases.
Yeah, few things are, and I think we're going to see more proposals and debate about what to do about AI, what to do if it does cause the joblessness or levels of the joblessness that people fear, what to do about the wealth that it's creating if inequality continues to get worse, or whether we should just stay the course too. That this is the new wave of the future, and that there's going to be winners and there's going to be folks who don't win, and that's how it's supposed to be. I just think we're going to see again really robust debate, and I think we've entered a chapter where these kind of ideas are going to be coming out of the woodwork more frequently.
Great. Well, I encourage everyone to stay tuned to your byline for more coverage on that because that is the exact flavor of topics that I'm excited to read from you. That is Eli Rosenberg, our tech, wealth, and culture reporter here at The Information. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, on our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media, on X, on Instagram, and on TikTok. I am already excited for our next show tomorrow. Have a great rest of your Monday. Bye-bye for now.